Hey guys, it's Andrew again from Learn How to Trade Online. In this video, I'm going to go through some more stuff on false breakouts and again, why they move markets. So we know that false breakouts are incredibly important given the fact that, well, quite frankly, it's institutions taking money off of retail traders. And let's go through and look at some of the recent moves. This is just from yesterday, 5-minute chart, euro dollar. Just look at some of the recent successes, failures, and just see what happened really. So anybody that was selling through here likely sold again at this point. You've got a reversal candle from buyers to sellers. You've got a ringed high. Likely they sold underneath there. Starts to go down, broke this low. This is your first false breakout. So forms a pin bar, reverses around. This would be what I would consider to be a good false breakout trade here. Now, what happens is if you're just aiming for, say, a 1-to-1 reward to risk, then obviously you're going to win more often. If you're aiming for bigger wins, then obviously it takes a bit longer to get there. But this, basically, if you're aiming for a 1-to-1, you'd hit target. If you're aiming for like a 2 or a 3-to-1, then unfortunately you wouldn't. But we then get ourselves another false breakout. So this is the high. This is the false breakout at the previous high. Again, if you're going for a 1-to-1 there, you'd quite happily hit target. If you're aiming for more, then it would be a loser. And this is because we've got this kind of outside expanding triangle taking place through here, where you're taking out the highs and taking out the lows. This pattern alone is where so many retail traders get smashed and chopped around, and then they aren't there for the moves that happen next. And that's when the money's made. This is just a great way for the institutions to shake people out before they move the market. So, wrong button. They were the first couple of examples there. So this would have been a trade, this would have been a trade, this would have been a trade. We then have a false breakout of these highs and again through here. I don't know when you see any amazing price action on this first one. Maybe you're trading this double inside bar. If you took the double inside bar as a loser, then we get ourselves an aggressive move up, followed by the move down. This is a seriously strong false breakout here because it tried aggressively to break out, but failed. So, because it tried to break out and failed, that would be your entry. And again, if you're aiming for a 1-to-1, 2-to-1, maybe even 3-to-1 there, you'd have hit target quite happily. Looking through a few more, let's just, you'll see this kind of wedge forming at the minute. Then we get ourselves this false breakout with a pin bar. Unfortunately, this one loses, but nothing's perfect. So just working off of 1-to-1s to begin with, it's likely that you'd have had a trade off of this and won, a trade off this one and won, a trade off this one and won, a trade off this one and lost. Just mark it in orange for a loser. And then a trade off of this false breakout, which would have won. Then a trade off here, which would have lost. So looking at that so far, what have you got? 1, 2, 3, 4 wins and 2 losses from a small sample size at this point. But you'd have made some money. Carrying on from there, I think personally that this is a low point that you see you get a false breakout from. If you're trading that as a 1-to-1, back up again, you'd have made some money there quite happily. We then have this false breakout. So we broke above the previous high. Nice reversal candle, followed by a very big move down. Again, just doing 1-to-1, you'd have happily made money there too. And if you took this final false breakout down here, I mean, there's more, but it kind of goes sideways after this, and it's getting towards market close. But anyway, you may have taken something here, and if you had, you would have eventually made some money. But point is that looking at these false breakouts, what have we got? 1, 2, 3, 4, 5, 6, maybe 7 wins to 2 losses on a 1-to-1 reward to risk. Obviously, if you go for 2-to-1s, you probably get similar results, but maybe an extra loser or 2, but obviously the wins are double the size. If you go for 3-to-1s, you probably again get similar results, just much bigger wins, and obviously a few more losing trades. But that's just taking a look at false breakouts. I did just a pure example for you so you can see as to how price manipulation drives markets, basically, and why you need to be using price manipulation in your own trading so that you're on the right side with the smart money rather than fighting against it. Because To be quite frank, fighting against the big smart money is very expensive and it's not going to work out well for you. Hope you enjoyed this video. Please feel free to like, share, subscribe, and you'll get access to more of my videos as they become available. For now though, good luck with your trading going forwards, and I'll see you in one of my other videos.